the $87,000 level. And Grayscale's Zach Pandel discusses the crypto-focused asset manager's market outlook for the new year. Welcome to CNBC's Crypto World. I'm Mackenzie Sagalos, taking a quick check of prices as we kick off the week. As of noon Eastern, major cryptocurrencies are slightly in the red, with Bitcoin hanging on to the $87,000 level and Ether trading just below 3K. XRP fell by about 0.25% to $1.86. Those moves lower coincide with stocks, which fell today, spurred by losses in tech names after the S&P 500 scaled to fresh records just last week. The AI trade coming under a bit of pressure this morning. NVIDIA, Palantir, and Meta platforms all suffering losses. All right, let's jump right into our main story. Grayscale recently released its 2026 Digital Asset Outlook Report, focusing on topics including crypto regulation and ETFs. Crypto World's Talia Kaplan spoke with Zach Pandel, head of research at Grayscale, about the report and what we can expect to see in the year ahead.
Grayscale released its 2026 Digital Asset Outlook this month, dubbing next year as the dawn of the institutional era. According to your new report, Grayscale expects 2026 to accelerate structural shifts in digital asset investing, which have been underpinned by two major themes. One, macro demand for alternative stores of value, and two, improved regulatory clarity. Now, Grayscale writes that these trends should bring in new capital and broaden adoption, especially among advised wealth and institutional investors. You were integral in putting this report together, so can you elaborate on how these trends can help achieve broader adoption for the asset class?
Absolutely. Look, these are the two big pillars of the bull market that we've seen to date. One is demand for alternative stores of value. There's a lot of things happening in crypto, many different types of technological developments and use cases of blockchain technology. But the biggest asset in the market, Bitcoin, is driven because of demand for alternative stores of value, because of debt and deficits and the risk of fiat currency debasement. This drives interest into our asset class. I think that continues as we move into 2026. I don't think these macro imbalances and the portfolio shifts that they are creating are going anywhere. And then the second big piece, of course, is that regulatory clarity for this technology. Blockchains are financial technology at their heart, and so they do require a comprehensive regulatory framework to make sure that consumers are protected, that the financial system is protected as the technology gets bigger and bigger and more deeply integrated into the mainstream financial system. It's been a long journey on that path. How I like to think about it is in 2023, Grayscale won its lawsuit against the SEC over Bitcoin ETPs. In 2024, Bitcoin Ether ETPs came to market. This year, 2025, we saw the Genius Act, lots of other regulatory changes. Next year, we think that continues with market structure legislation passing the US Congress. So demand for alternative stores of value, regulatory clarity for us, these are the big pillars driving the bull market in crypto over the last years and likely to continue in 2026.
Focusing on the regulation component, many people in the industry were hoping to see a crypto market structure bill become law here in the US before the end of the year. That didn't happen, in large part due to the longest government shutdown in US history. Senate Banking Chair Tim Scott said that the committee has made strong progress with Democratic counterparts on the legislation, and that a markup is in fact expected in early 2026. What's your outlook for crypto regulation in the US in the new year, and how will that change the crypto landscape, expanding on what you just told me?
Yeah, absolutely. Look, it can be easy to forget where we were at the beginning part of this year, where the US government had investigations and lawsuits with many leading crypto industry companies. We've come a very long way this year in terms of the operating environment for businesses in crypto in the United States. However, there is still a long way to go. Many assets in the space, many institutions in the space still do not have a clear federal regulatory set of guidelines. And that's what we need from this market structure bill. You're exactly right, Talia. The timeline got off track with the government shutdown, but looks like we are on track in January or Q1. Look, what I want to see is bipartisan progress towards this legislation, even if it doesn't get done. I think it will get done next year, but bipartisan progress, that's really the key. We want to make sure that crypto remains a bipartisan issue. That'll help us grow and evolve alongside the US financial system in a sustainable way over the coming years and decades. So we think that that progress is going to pick back up next year. Now, what are the implications of this? There's a lot of different things. The legislation touches tons of parts of the industry. But in my view, the most exciting piece is that we are going to give regulatory clarity for many types of assets in our space, and probably we'll call many of them digital asset securities. So changing the regulatory status of these securities. And I think giving that clear categorization will also allow businesses to issue tokens. So our expectation is that many types of firms, startups, mature businesses, Fortune 500 companies will issue tokens as a natural part of their capital structure alongside stocks, bonds, and hybrid instruments. We need regulatory clarity to bring that process forward. So that's what I'm looking forward to. I think we're going to get that legislation passed next year on a bipartisan basis, and I think it will stimulate issuance of tokens by lots of different types of entities, something that is huge for our business and huge for the crypto asset class over time.
Turning to price, Grayscale forecasts that Bitcoin will likely reach a new all-time high in the first half of the year. Why do you think that is? And what will it take for that to happen? I'm assuming regulation advancements in that regard is a factor, but what other factors are in the mix?
Yeah, absolutely. Look, I think it goes back to those same two pillars, demand for alternative stores of value and regulatory clarity. Both of these things likely driving ahead for the crypto asset class in 2026. On the macro demand, look what's happening with gold and silver. Look what's happening with the debate around the Fed chair and interest in low interest rates. Look, it's very clear that President Trump wants to see lower interest rates. He has the opportunity to really set the agenda for the Federal Reserve by naming the Jay Powell's replacement. I think next year will be a year of dollar weakness, of Federal Reserve rate cuts, and of strength in gold, silver, kind of physical stores of value, Bitcoin, Ether, maybe some other crypto assets, digital stores of value. I think these things will all benefit from that macroeconomic climate that we are living through. And then on regulatory clarity, look, I think what it requires is passage of bipartisan market structure legislation. I think that's going to happen. And I do think it's fair to say, though, that if it doesn't happen, if we have a breakdown in bipartisan progress on crypto, I think that can be considered a downside risk. So our optimistic view is premised on the idea that that bipartisan legislative progress continues. If, for example, it gets sidetracked and crypto becomes a partisan issue in the context of the midterms, I would consider that a downside risk scenario for the asset class.
Now, last time you and I spoke earlier this month, we talked in great detail about spot crypto ETFs, especially because Grayscale launched a spot Chainlink ETF in the US a few weeks ago. According to your 2026 digital asset outlook, Grayscale expects more crypto assets to be available through exchange traded products next year. Can you take us through the reasoning there?
Yeah, we are seeing really an explosion in the launch of these types of products thanks to regulatory clarity from the Securities and Exchange Commission, which gave us what are called generic listing standards, essentially quickening the process, clarifying the process for bringing these products to market. Talia, you remember that it was a very long battle to bring the Bitcoin ETPs to market. Grayscale played a central role in that battle, but we got there. Now we have a more streamlined process. Grayscale launched a Solana ETF in recent months with staking enabled, an XRP ETF, a Dogecoin ETF, a Chainlink ETF. So all just in the last couple of months. You're going to see that continue as we turn the page into 2026 with really the leading altcoins, the tokens that have real adoption, real use case, real institutional investor interest. These are going to be coming to the market. I think we can expect that process really to carry out all the way through 2026. And I think investors should look for staking rewards to be enabled in basically all cases where it's possible. This has been an important part of the differentiation among these products, is investors seeking out staking. Grayscale delighted to be the only asset manager today staking our Ethereum ETFs at scale in the US market. I think that's going to continue to be a differentiator. So more products, more features like staking. I think more derivatives, options, futures on these products, all of these things will continue to expand in 2026.
Now, your report also points to two topics that Grayscale does not expect to influence crypto markets in 2026. And one of those is digital asset treasuries. Why do you think that is, especially since we have seen a rise in DATs in 2025?
Yeah, we called this our red herring topic. Look, I think it's clear that this is a buzzy topic in the media and in crypto markets, and got a huge amount of attention in 2025. And still, many investors focused on this issue looking into next year. Look, my somewhat out of consensus view is that the DATs will be somewhat of a boring topic as we move into 2026. These are vehicles, public companies that own crypto assets, and we think that they will behave largely like closed-end investment funds, meaning they don't often buy assets and don't often sell assets. In that sense, I think that they will be relatively boring. At the same time, I don't think that these vehicles are going anywhere. We know that there are investors that want to access crypto through a public equity vehicle, and listed companies that are operators in the space, exchanges and other types of businesses, that can be one solution. Digital asset treasuries, that can be another solution. But I don't think that they're going to be major drivers of valuations in 2026, either on the buy side or the sell side. I think they're going to hold these assets, trade close to fair value, and be a little bit out of the spotlight compared to 2025.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.
Hi, everyone. I'm very glad to have the CEO and co-founder of Digital Assets, the company behind Canton Network, Yuval Ross, on the podcast today.
Hey, Leslie. Good having you.
Thanks for joining us. So we were initially about to do this podcast in Paris, in person, and then New York. But we're both quite busy, especially you, man. So we were doing it online instead, but that worked just as well.
Yeah, next time in person.
Next time in person. Canton Network has quickly become the go-to on-chain for regulated finance, trusted by Goldman Sachs, Dutch Bors, Euroclear, BNP Paribas. While other L1s spent years pitching institutional readiness, Canton delivered it. I'm also very excited to have you, man, because you announced your fundraising this week, $135 million strategic round with investors like DRW, TradeWeb, BNP Paribas, again, Circle, Citadel, DTCC, Goldman Sachs, and others. Congrats.
Thank you. No, very, very, very excited about what's coming.
And I would like to start because before Digital Asset, you had a life in finance in New York, working at Citadel and DRW. So maybe can you come back on that background, and how did you fall into the crypto blockchain rabbit hole in the first place?
Sure. Interestingly enough, I fell into finance just as randomly as I fell into crypto. I studied electrical engineering, and a random person told me to apply to Citadel, and I asked him, what is Citadel? He said, it's a hedge fund. I asked, what is a hedge fund? And he said, you should just apply. I interviewed there, and clearly the people were very smart, and then the offer was very good. And I said, they're smart and successful, so we'll just try that out. And then I moved to DRW, where we did ETF market making. And, I was very fortunate to work for Don Wilson, who's, I have to say, as a successful CEO, the fact that he still keeps his mind so open and allows everyone at the company to pitch him ideas is great. And I was fortunate that Don gave me the opportunity to start the venture arm of DRW. And randomly at that time, my co-founder, Eric, together with people that know at crypto, Mike Komaransky, started Cumberland Mining, which is probably one of the top liquidity providers in crypto these days. So he started that. And we, because he was looking into crypto, the venture side of DRW was really going to focus on everything that touches kind of all related to DRW's core businesses. And that's how I started looking into crypto.
Right. What was the businesses you were looking at the time that excites you in the firm?
Interestingly enough, in 2013, we funded a business that was trying to bring the ability to buy with credit card Bitcoin. Saying that was a bit early. They solved a lot of fraud purchases in the PayPal ecosystem and sold a company, and then we're like, okay, we can just do the same for crypto. The company a few years later, I think, exited. But we were looking at those type of things, and to be honest, the reason why we left DRW to start this company is because we were looking at companies how to bring some institutional adoption to the space, and really didn't find between 2012 and 2014 many of those companies, as you can imagine. So in 2014, at the end of 14, we decided to leave and start Digital Asset.
Which is super early. I mean, more than 10 years now, nearly over 10 years. And what has been the first pitch, initial challenges, and then which led to Canton? Because people think of Canton as the end product or the end network, but you've been building for 10 years. What happened there?
Yeah, I definitely have the benefit of revising history now with all of the vision. And a lot of times people will ask, was this the original pitch? And I would say directionally, yes. Of course, over the years we have polished kind of the vision and where we're going. But interestingly enough, I would say that even when I think about the initial idea, we're kind of still in that direction, which was how do you bring better collateral management and better infrastructure? And it started with Bitcoin, right? And the thought process was, if you could solve it for Bitcoin, can you then leverage it and use it for other asset classes? But the idea was to create like a clearinghouse or some kind of like prime services for Bitcoin in 2014.
Right. And yeah, from your background in market making, you knew the issue and you knew the use case, and you also understood how blockchain could facilitate these trades. And why DAML as well? Like, what was specific to DAML versus, I think although smart contract technology were early, I mean, they're in their infancies, and but you decided to go through DAML and formal verification. Why is that?
Sure. When we started thinking about, well, what does it mean to build like a ledger to process things at scale, and for large institutional players, we realized that you need to build also applications that now operate in a decentralized world. Generally speaking, I find that when you look at technology and you look at languages, different languages do better when they are designed for very specific things, right? So when you look at front-end development versus back-end development, I'm not saying that you can't do both in different languages, but there are just languages that are better suited for specific tasks. And we thought that if you're going to have a distributed system or distributed applications, you probably want to think about a language that is suited for that and was designed with that kind of a framework. Where I think that when you look at Solidity, it wasn't designed for that. I mean, it's effectively kind of like taking another off-the-shelf language and making some adjustments to it. And that's why you're seeing in the Ethereum ecosystem and just generally speaking on smart contract languages, you're seeing a lot of hacks and it's really hard to get these applications right. So, one of the criticisms we get about DAML is that it's hard to use. And that is very fair criticism. And we have a lot of things that we're doing to improve it. But, every time we talk to smart contract auditors, they're like, yeah, this is a very well thought of language for these types of applications. And we started there, so DAML was, how do you build a distributed application? And really, when you think about it, Canton is the ledger version of DAML. So to me, DAML and Canton are kind of like two sides of the same coin. One is the ledger representation of our, how do you represent distributed applications? And one is how do you define them? That's the language.
And DAML, the language was pre-existing the ledger Canton. So how did these banks and traditional financial players would use DAML for a couple of years before they moved into Canton?
Yeah. So again, I think that, like I said, DAML and Canton are two sides of the same thing, but the ledger took longer to build. At the end of the day, you could compile DAML down and really run the binaries on even on a centralized, on a SQL database. So kind of similar, like if you think about Base, right? Like it's really Solidity contracts running on a single node. So you could.
It's a good credit that you give. We will say hi to the Base folks there.
I mean, I think that's true. No, so you could run DAML on a Postgres database, and it would give you a very interesting distributed behaviors, but it's eventually gets committed into a centralized database. In the early days, there were a lot of people that were building other ledgers, and we had a team that, like a driver team. So we would kind of like compile the language to different distributed ledgers. Like it was able to run on Besu, on Fabric, like in the early days. And we even had a small stint with VMware. And the reason for that is we had to continue kind of like finance the business, be able to have money to build Canton behind, quietly. I think we'll talk a lot about, the value of not having to deal with things in production or a community and then think about like, oh, I didn't design the ledger exactly how it should be, and not having to migrate hundreds, if not thousands of applications or clients in production. So the nice thing is the language allowed us to kind of like get clients, get to know how to build these applications, but kind of allowed, the ledger team build Canton in the background.
Right. And I remember these days as Kiln, we started as a kind of a private blockchain as a service platform. So we would deploy all the techs, the ones that you mentioned, Bezu or Hyperledger, and of course it was seeing what you at the digital assets team you were building with DAML. And let's talk about Canton and that ledger and this ledger that you've built for so many years and now so many great names are using. It seems that privacy, but also other features, components are so unique to this network. Can you come back a little bit into that? Can you come back on why Canton is different than other L1s and why it has a wide demand these days?
Sure. It's going to be a bit of a long answer, so I'll try to. I'm going to try.
I mean, I have time. It seems you have less. I don't know.
No. We have time. So I'll try to break each component and kind of like go a bit deep into like the element. So I think that maybe as a precursor, the way that I think about our view of the world at DA and then the Canton ecosystem is that the world is not binary, right? The world is not either it's public or it's all private. We don't believe that the world is either permissionless completely or permissioned completely. As we all know, the world is extremely heterogeneous. There are different laws, there's different regulations, there's different needs, right? And if you kind of think about the internet as like the most successful public network out there, right? Like certain websites have a login, certain don't, right? Like there's just so many nuances and reasons why things need to be different. So I would just start by kind of saying like, unlike, and now I recently heard like this week, legacy crypto, that takes like this very binary approach. The ledger kind of says, this is the model, and either it works for you or it doesn't. Like you kind of have to like make a decision. In DA and just Canton in general, we just don't believe it. And so how does that translate to why is Canton different? So one, you mentioned privacy, and I wanna correct something because you said for regulated finance. I actually think that privacy matters to everyone. I think that in crypto, because no one solved privacy properly, we almost accepted it as a feature rather than a bug. I don't think that privacy is only for regulated financial institutions. Everyone should care about privacy. And I can give some funny examples where I'm pretty sure individuals would have wanted to have their Venmo setting with privacy rather than blasting it to the whole world, because they pay for that later. It's just that for regulated institutions, privacy is a prerequisite. Like they would not do something without privacy. But again, I think that in crypto, and we'll talk about that later, privacy is also really resonating. And since we launched Canton, actually we have a pretty big take from crypto companies that are saying like, hey, how do we do things on Canton without everybody front running us because they see our wallets? So that's just one thing. Now, I think it's important to explain what I mean by privacy, because I think that now suddenly the world have woken up to privacy. Suddenly they realize that in order to get the institutional adoption, we need to get privacy. And I think that a lot of people talk about privacy, but they, in my opinion, misuse the word sometimes. So what do I mean by privacy? Privacy to me is very similar to what like a contract confidentiality clause will say, which is, we sign a contract and there will be a confidentiality clause. And the confidentiality clause will say, Laszlo, just you and me as the signers of the contract are allowed to see this contract. And it will also say maybe our related parties, meaning, our lawyers, our accountants, our auditors are all allowed to see this contract. It will then also have all kinds of like specific scenarios in which we can expand, the perimeter of our privacy area, which is, hey, if Laszlo got called by a regulator, well, then Laszlo can now expose this contract to a regulator. Or if you have been subpoenaed by court, you'll be able to share it to the court. So confidentiality clauses will have like these special scenarios, right? Now, if you translate that to smart contracts, I think about it very similarly. Like we believe that privacy is the ability to share information on a need-to-know basis. So you could have something that is completely permissionless, it's completely public, the whole world can see it. That's the privacy perimeter. You could think about something where you're saying like, I just want part of the transaction to be visible to the whole world, like the NASDAQ tape. Like I can see all transactions that are happening. I just don't get to see who is transacting them. Like, so again, it's this like not this binary view of the world. That to us is privacy. Now you're seeing a lot of people, getting excited about zero knowledge proofs. And I think to me, that's not privacy, that's anonymity, because zero knowledge effectively says nobody gets to see the inputs that have constructed the output. And I think that that's just a disaster in financial services waiting to happen. And we've seen example with Solana confidential transfers that you could have minted coins out of thin air, but the zero knowledge said everything is okay. It's only when someone found the bug that you realize that someone took advantage of it. But at that point, the ledger have been corrupted. You don't know who's good, who's bad. And to us, zero knowledge equals anonymity, which is very different than privacy. And again, if you go back now into regulated finance, I don't see how a regulated entity that could have outcomes related if the inputs were incorrect would trust an algorithm to tell it, no need to see what are the inputs, just trust me. I give this funny example where I say, imagine you had a black box for collateral management, and the black box was called Sam Bankman-Fried. And, you just sent collateral in there and Sam would tell you like, yeah, don't worry, the collateral is in here. Trust me.
Here's the proof.
It's all good. Here's the proof. Exactly. And then the day the market crashes, suddenly you find out that the collateral was never there because there was a bug. And again, this is not dissing the technology. The technology is incredible. Actually, our third co-founders was in the group in the Technion that helped create zero knowledge. I mean, like there's a lot of admiration and there are good uses of the technology. Privacy, it's not. So that's one bucket, and it's a very important bucket because I think that when you think about the excitement of stable coins now, and if you want to bring like large enterprises to stable coins, I just don't think that they would be okay with the whole world seeing their activity on chain. So that's one element. The second element is this idea that you need to have control over an asset if you want it, not necessarily because it's a must, but because you want it. And I think that when you think about what is the value of blockchain, it's this ability to interoperate assets. And you want the assets to live natively on chain, like in crypto. Well, if you want the assets to live natively on chain, you want people to get comfortable to put their books and records on chain. So you would really have that kind of DeFi experience for real world assets. Well, now take what happened recently with Sui. A bunch of third parties without any rule book just decided, and maybe it's for a good reason. I'm not here to judge the reason, but they changed the ledger. They reversed the hack. And this we keep on saying in this industry that the ledger is immutable. It really isn't. Proof the DAO hack was the same. So today there's a hack and the ledger gets changed, and tomorrow you change the ledger because we don't like French people and we want to reverse all of Laszlo's transactions, right? Like that.
But yeah, okay.
Right. But I think the fact that you don't have control over your asset is just by default automatically kills the ability to say, like, I can trust this technology to put all of my assets. So this ability to configure the control over your assets if you want it is another big feature of Canton. Horizontal scaling, again, like if you look at a lot of these ledgers, they kind of take this view of a singular ledger. It will run everything. Ethereum will be the world computer. I think that that's either a hubris or a very naive kind of assumption that one database, which is distributed, which reduced its performance, can run the whole world on it. I mean, it's just, and that's why we're seeing the scaling issues of those things. And even Solana in the meme coin boom had scaling issues. And even though it's an incredible piece of technology, a single ledger will have at some point a vertical scaling issue. And that's why you've seen kind of in Ethereum, Laszlo's transactions, right? Like that.
But yeah, okay.
Right. But I think the fact that you don't have control over your asset is just by default automatically kills the ability to say, like, I can trust this technology to put all of my assets. So this ability to configure the control over your assets if you want it is another big feature of Canton. Horizontal scaling, again, like if you look at a lot of these ledgers, they kind of take this view of a singular ledger. It will run everything. Ethereum will be the world computer. I think that that's either a hubris or a very naive kind of assumption that one database, which is distributed, which reduced its performance, can run the whole world on it. I mean, it's just, and that's why we're seeing the scaling issues of those things. And even Solana in the meme coin boom had scaling issues. And even though it's an incredible piece of technology, a single ledger will have at some point a vertical scaling issue. And that's why you've seen kind of in Ethereum, this bifurcation of all these L2s. But what they've done is they, in my opinion, ruined the most important feature of blockchain is they killed interoperability. So there is no interoperability within these L2s. They're not giving you the user experience of being. So what's really unique in Canton is the ability to have horizontal scaling of the ledger, meaning you could just keep on adding cantons to the ecosystem, and effectively the Canton network becomes bigger and bigger, while still giving a user the user experience of as if I'm connected to a one single L1. And I think that that is extremely powerful. I always say, like, imagine when Netflix showed up to the internet and said, hey, Internet Foundation, you're not big enough for us. You're not fast enough for us. Can you please make changes because we want to start streaming movies? Like that the internet wouldn't be what it is today. Like, they just added their own data centers. They made the internet bigger, right? But still, when you're connecting with a browser, you get the user experience of I'm part of one network. And I think that that's an extremely powerful component. And then, the interoperability. So maybe as a summary, that's the reason why the name is Canton, right? It was developed by our team in Switzerland. But actually, when you think about the Swiss system, right, you have these different cantons, and every canton has its own nuances, tax rate, language. They don't even spell canton the same way. They have local rules and laws, but they all interoperate under Switzerland, right? So they all interoperate as if, not as if they're part of one country. And that's kind of like maybe the mental model for Canton.
Right. So privacy, the ability to make sure the ledger doesn't change and you can trust that the information will stay as is. Scaling and interoperability. So I guess just on the privacy side, that's a small question, but you can unwind the fact that you've shared it to the world, but you can take a very private information and make it more globally shared, right?
Yeah. So the privacy perimeter on Canton can dynamically change over time. It's not fixed. And again, I think it's important to understand, and that's why I said that privacy is different than anonymity. Like if Circle, so for example, we signed a partnership with Circle in January. Circle will still be able to see all of Circle's transactions on Canton. It's just that maybe if I send to, I don't know, someone else a USDC, Laszlo, you just wouldn't know that that happened. But Circle itself would still be able to see the information that is happening. And that's why they can use the likes of Elliptic and TRM to still do, KYC, AML within it, where again, in a zero knowledge, you would have much more challenges doing that.
Right. Can you come back? You already started to mention it, but can you come back on the architecture of the Canton Network with, the global synchronizer, GSF, and the cantons essentially?
Sure. So I think that I'm trying, because I think a lot of people know Ethereum, so I'm trying to use so really our view is that, again, the real value of blockchain is interoperability. It's the ability to do composed transactions without any intermediaries involved, right? That's really what DeFi is, right? Like, you have all these assets that are on the chain, and I can compose them into financial functions and do really cool things together. So the architecture of Canton is that you have these different cantons, and the cantons can have assets and applications running on them. They can stay localized. So you could think about them like L2s, right? I would say that they're very different, because within L2s, for the most part, there is no privacy. Within a canton, you could still have privacy, but architecturally, you could kind of like use that. But then there's this global synchronizer, which is run. I can't even remember how many companies are running the global synchronizer, like a BFT algorithm, and that is providing like a global synchronization across all the cantons. And that's really what's giving you kind of that user experience as if you're connected to an L1, because you could be connected to many of these different cantons. And now if you want to do like like some kind of a lending or a DEX or something like that, the global synchronizer effectively will give you like this deterministic settlement layer across all of these different cantons. So again, you're getting this user experience as if they're all actually sitting on one single ledger. The one thing that I would say is extremely cool is that these different cantons can have different privacy properties, and you could still compose a transaction between them. So I'll give an example. Imagine there was a stablecoin canton that didn't have any privacy. It looked very much like stablecoins today, pseudo-anonymity. Everybody gets to see all account balances and all transfers. And you had another canton that does things fully private. It does life insurance, which actually is happening on Canton right now. So you can imagine that life insurance has a lot of sensitive information, so you cannot share that. But now I want to use the stable coin to pay my premium on my life insurance. You could actually on Canton have a composed transaction between those two applications. And it's really like, let's say, Laszlo, you're the insurance company and I'm the client. You and I would actually see two sides of the transaction, because we are within the privacy perimeter of both of those cantons. But someone else who is just a stablecoin holder, all they would get to see is that a stablecoin moved between two wallets, but they don't know for what reason, right? And that to me is really what's cool about Canton, because it allows you to operate as if you are in the real world, where you have these different constraints, rather than try to figure out how do you, fit, like a circle within a square peg, because, there is no privacy, and you have to do then a lot of things off chain. And really lose the value of blockchain.
Right. In coming back on the global synchronizer, you mentioned, couple of, I think it's 23 plus companies running the bit, but you're going to extend it over time. It's essentially a mapping of who and which players, or at least which nodes, are interacting in each cantons. Is that fair to say, or how do you see
how do we see that group? I think, again, and this is maybe related more to, so first of all, I don't decide who. There's a proper foundation governed by Linux, and there's decentralized votes. And I wrote an article recently that I think foundations are the future, but we need to be a bit more honest about how we operate them. But I think that something very different in how we took Canton to the world Like I think I can't remember the numbers, but like on Sui, you have to put $60 million to be a full node. I can't. The number for Solana is a very large one, and I think that just doesn't create the right behavior necessarily in the network, right? Like, what do we want from these public chains? We want stuff to happen on them. We want real business activity to happen on them. So in Canton, you don't pay to become one of the validators that run the global synchronization. The way the network vote people in, which I think is really cool, is because they add value to the network. So if you think about those super validators as the owners of the network and they have a big stake in the network, you want them to have a real stake, a real skin in the game. So I'll give a example. There's like Kiln, for example, are helping the adoption of the network. You're actually making commitments to bring clients and things like that. So Kiln will become one of the super validators. We just made an announcement with Nasdaq yesterday. Nasdaq is bringing Calypso. They're going to be processing, variation margin and initial margin on the network. That adds value. TradeWeb, largest exchange for fixed income and rates in the world, have made commitment to build multiple applications on the network. So we don't ask for money to become part of the network. We ask you to help bring activity because we believe that by doing that, first of all, we will all benefit from that. And second of all, you have all like-minded organizations within the network that are truly driving value. And that's why I think that as a result of that kind of way of taking the network to production, I think that Canton today is definitely top 10 from on-chain activity, and I think that within the next year we'll be in the top 3.
Yeah, and you started to mention 3 examples of partners that are super validator by becoming great partners in the network and building on top of the network. So that's Nasdaq, that's TradeWeb, and Kiln. By the way, I'm very glad to be among these two other names. Can you outline other type of partnership or ecosystem drivers that you have in Canton?
Sure. I mean, I think that the way I think about blockchain or an L1 ecosystem, there's like 3 things that you need. You need assets, you need users, and then you need applications that allow users to consume those applications. And then anecdotally, kind of on the side, you need a lot of infrastructure to enable those 3 things. So I look at like Kiln, as the infrastructure that allow those things to happen. But at the same time, Kiln can also bring users, right? Because you have onboarded a lot of clients and you are probably in the staking, the fastest growing and soon to become kind of like a market leader. You then can think about
we'll quote that, right?
yeah, you can I needed to give one quote. But if you think like then crypto custodians you could think about that as kind of similar. On the other hand, you could start think about like, well, what are the other players that can now bring assets? So like Franklin Templeton, I think, is about to go live on Canton with their money market fund. That's like really cool assets. The likes of DTCC can bring assets. Goldman Sachs, HSBC, BNP, those are all players that are bringing assets into the network. And, Circle was one big partnership that are bringing stablecoin. And soon, I think, there's, like 4 or 5 other stablecoins that are coming to Canton. So that's another type of a partner. And then there's the different applications, right? So, TradeWeb is building, just announced, I think like it was 2 weeks ago, they announced a partnership with Lennar, which is the largest home builder in the world, where they're going to use Canton to orchestrate hedging of interest rates, right? There's different applications that are now consuming assets that exist. I'm very excited from some of the conversation this week on like DeFi protocols that are talking about coming to Canton and now taking advantage of the privacy features and the assets and the users to actually drive, financial activity. So that's just kind of the types of partners that, we want in the network. And that's how the foundation operates, is it wants to reward those that actually bring activity. So you cannot buy yourself. I mean, you can buy Canton coins, and we would love for people to do that because I do think that it will be the #1 smart contract chain in the world very soon. But, as a foundation, our way of rewarding, being part of the network earning, being a super validator is by being an active participant of the community rather than buying your way into it.
Number one smart contract blockchain in the world. And you mentioned, you cited a lot of use cases. You also said that top 10 blockchain in terms of transaction, soon top 3, but you already top 1 into one metric, and the world doesn't really know that. And that's tokenized assets and assets represented on Canton. So I think I have this crazy number that very few folks in the industry and outside know it, about like 4 trillion assets that are represented on Canton. Why do people don't know about it? And yeah, how do you see that number evolving?
I think so. I think first of all, it's important to remember that there are $400 trillion worth of real world assets. So we're talking about small numbers. I talk sometimes to people. One of our partners in the Canton ecosystem is Broadridge, who I think they alone, if I'm not mistaken, have tokenized over $2 trillion of U.S. treasuries and do about $100 to $150 billion of repo every day. And people in crypto are like, I don't believe you. That's no way. And you then go and look at the repo market and you realize that it's about $10.5 trillion every day. And you're like, okay, 150 billion is not that much. So I think that a lot of times people in crypto have like this kind of tunnel view and they're like, 3.5 trillion, that's the world. Actually, it's not. And it's far from it. And when they look at, the daily volume of 200 billion, that is tiny. So I think that we are trying to open the perimeter of appreciating what is the opportunity. And I think that why people don't know about it. I mean, I think that, and I don't think this will come as a surprise. I think that a lot of the problem of crypto is big promises that were not delivered. And I think that for us, the way we wanted to take this to market is actually build, beachheads of real things of magnitude. And when we launch the public network and we actually bring this to life, it's not going to be yet another white paper of what will happen in the future, right? And I think that that's just, the last week I've had like these really cool conversations, and people are like, why have I not heard about you? And I was like, actually intentional. I think that it will have a much bigger impact where you could actually demonstrate what's now, what's real, rather than again talk about the future. So that's just was a very intentional go-to-market strategy. We want to have when the Canton coin lists, we want to have real convexity to the price, and I think that the only way to do that is because there's real activity. There's real world activity that is not necessarily just like gambling, right? I think that this is my biggest vision is if the market goes up or down 10%, the repo market still prints $10 trillion every day. So we want to bring activity that is not going to be so correlated with market movement. It's because they're running real underlying business. So that's, I think, the reason why people haven't heard about it. And I think very soon you're going to see Keiko and Cumberland just announced a partnership yesterday to bring market data to Canton. So you're going to start seeing them publishing statistics and numbers from all kinds of projects that run on Canton into the likes of the TAI or RWA.xyz and other venues where you'll actually be able to see a lot of the activity in real time.
And congrats to Amber at Keiko for that partnership. And it's been 10 years you're building on Canton. You mentioned some of the use cases. Can you share with us other use cases you excited that are coming on Canton, and also what you want Canton to be the legacy of?
Yeah, I'll start with the end. I mean, our vision is that every financial transaction of any meaning will run on Canton, and I think we really have a chance of doing that because we've been patient, we've been thoughtful, and we've taken our time to think about what would that require. So that's we want to become the backbone of the next iteration of financial markets. I think from a use case perspective, I think that what we have seen as really good use cases right now. It's not that they're the only ones, but like if you think about payment and collateral management, the reason why I think that they are really good use cases is if I take a step back, one of the things that Jonathan, our CMO, says is what Canton enable is for finance to work the way it was intended to. We're not trying to change finance for the most part. It's just that a lot of times, like I'll give an example. A lot of times people will use the term in finance, DVP, delivery versus payment. It insinuates that those two things happen at once. That does not exist today in finance because you cannot coordinate ledgers in real time without the risk of failure. Canton actually enables that. So the reason why I say collateral management and payments is because you could actually integrate Canton into existing systems and just have better user outcome without having to change the world. So the announcement by NASDAQ yesterday and Calypso is doing exactly that. Like, it's not that we're changing collateral management or the systems. We're just using better, smarter pipes to enable it. So I think that the amount of revenue, the amount of cost saving that you could do by mobilizing cash or cash-like instruments real-time 24/7, and same for collateral, is tens, if not hundreds of billions of dollars annually. And if that is the case, then you could just integrate Canton into those use cases and generate those benefits. So that's why I'm very excited, and that's why we're investing a lot there. At the same time, there's a whole slew of use cases of assets that are just very expensive to manage today, but it would require a significant shift. So, for example, we've done this really exciting work with iCapital, the largest feeder fund provider in the world, on how can you bring feeder funds into Canton to be natively on the network, and by doing that, reduce the operational costs associated with managing these funds to as close as possible to zero. So it makes it easier to distribute them, even maybe in smaller increments or for a wider audience. Those things are redoing assets than how they have been traditionally being done. We're doing the same in life insurance and annuities. So I'm super excited about those things. But what we're trying to tackle is actually, can we actually make the asset class more efficient to begin with before we even think about like secondary trading or moving them or all of that stuff? It's like, can we actually make the asset more efficient? So I think about assets that are generally speaking efficient, but if you could move them with privacy 24/7 in real time, you would unlock a lot of opportunity. And then there's much more of like your private assets, private credit, private equity, private companies, life insurance, those type of assets that we're trying to make them more efficient as a starting point.
And do you think we'll start to see also non-financial use cases in Canton?
I mean, I think that it's when we say non-financial use cases, the answer is yes. I think that the question is, what do we mean by that? Like, so we have sports wagering happening on Canton. That to me is a financial use case. We're talking about, I love running and cycling. Can we actually create a network that records like athletic outcomes? So I think the answer is yes. There's nothing at the end of the day. Blockchain is just a set of ledgers that can interact with one another seamlessly without any cost in the middle. So I think the answer is yes. I think that generally speaking, where there's tremendous value is in ledgers that carry financial value. And that's just generally, like, I would consider sports wagering to be in the same category. I just find that that's really where, the world will gravitate to solve problems, because that's just where you're going to capture the most value.
And I can't disagree with that. I want to be mindful of your time, because it's been 45 minutes we're together. And I might be busy, but you are these days a very busy guy. So just maybe one or two last question. What excites you in the world these days? Could be in crypto, could be in blockchain outside. What gets you excited?
No, first of all, I have to say that I have been stunned by the ecosystem that grew organically in Canton. I can't even stop to get excited about that, because again, I think that if you think about how do we take Canton, we didn't do a pre-mine, we didn't do an ICO, we don't have a foundation that sits on hundreds of millions of dollars of treasury. We started at zero. We wanted to stick to the foundation of Bitcoin and say we're gonna launch this in a fully decentralized manner, and the ecosystem will gain value because it actually delivered value. And the fact that the ecosystem wasn't, nobody had to bribe them to be part of it. Like the fact that it grew organically because it believed in the mission and what we're doing is by far the most exciting thing for me on a personal level. Like to get people sending me random, like, I've been Canton pilled, is super exciting. So that's just one thing. I think that, you mentioned not a lot of people have heard about Canton. You're going to see much more activity by digital asset. We just recently hired, the foundation recently hired a managing director to run the foundation, Melvis, who has, within a short period of time has done a great job. So I think you're just going to see the Canton ecosystem, start really like becoming very vibrant. There might be like cantonclub.com gets launched soon. So maybe there will be like a club. So I think that I'm just very excited about the community, and hearing from the community, how can we, make the user experience and other things better overall. That's one. And then, things like NASDAQ, like the round, the players that have participated in the next weeks and months, you're going to see asset classes that everybody in this space dreamt on having them come natively into a smart contract chain. And as a result of that, I think you're going to see really cool applications get built to take advantage of those assets. So community, and then some of the projects that I know are soon to be announced.
And I mean, 2+1 on that. We've been building in the space for quite a bit, running on many different blockchains, but it's really unprecedented the excitement I have seen the past weeks since actually you started to come out to the world about Canton, of how many bright people and bright companies have started to build and or even are about to launch projects on the network. That's quite unique.
Yeah, and actually, you make me think. I made a post yesterday on LinkedIn. So yesterday, Canton had a major hard fork, and I made this. I didn't perfect.
Yeah, for sure.
Yeah, it's the one of the community members made this great post that, like, when you think about crypto, like most of these ledgers don't do this very often. And like then when they do it, it's like this, like, and I think that that's a great thing for the community. They make it into this celebration. They give it like a name. They do parties and all of those things. But I think that maybe that's, I think kind of the differentiating thing about what we've been trying to do with Canton is the realization is that if we really want to change the backbone of financial services and finance, I think the celebration, they give it like, that's, I didn't perfect.
Yeah, for sure.
Yeah, it's the one of the community members made this great post that, like, when you think about crypto, like most of these ledgers don't do this very often. And like then when they do it, it's like this, like, and I think that that's a great thing for the community. They make it into this celebration. They give it like a name. They do parties and all of those things. But I think that maybe that's, I think kind of the differentiating thing about what we've been trying to do with Canton is the realization is that if we really want to change the backbone of financial services and financial markets, it requires a lot of work and a lot of thought and a lot of, evolution. We cannot upgrade the ledger once every few years. So Canton this week was a year old since mainnet launch, and we already had 3 major forks within 1 year. We do minor upgrades, I think, weekly. And I think that that's a huge testament, first of all, to the community, the foundation, that the technical committee is run by Justin Peterson, who's the CTO of TradeWeb, and this muscle memory of the community to kind of say, like, yeah, we are going to improve Canton daily, weekly, monthly, and we're not going to wait to do these parties. We're going to celebrate our wins in different ways. But to me, that's another thing that is super exciting is that, this is a community that is willing to lift, roll their sleeves up and kind of do the hard work on a continuous basis.
I agree more. And maybe very last question for you before you get back into this beautiful Manhattan. Who should we invite on the podcast if you had one person? And that's a tricky one, right? Because um, it's either an enemy, could be of course a friend or a mentor or someone that you respect. Who should we invite on the podcast?
Listen, I mean, I think that I am extremely blessed to have a mentor like Don, who gave me a lot of freedom, both at DRW, but then was a very big supporter and really helped push, and actually to some extent
to the end. So this is very special for Sensei. We started to run a Canton validator in July, and since then, we've been exploring the ecosystem. Today, we run 4 apps on Canton. We are exploring 12 other apps on Canton, and the ecosystem is huge. Even Sensei is brainstorming a potential future app on Canton, and we are in the process of being the first Canton node as a service provider on Canton. So there's so many things on Canton. So this is very special for us. And yeah, we're very proud to host this cocktail ceremony with Canton and partners. And yeah, so before to have the cocktail, for the ones who don't know what is Canton, Jacob McGroom, head of partnerships at Digital Assets, the mother company of Canton, is going to give you a presentation on Canton, and it's going to be followed by a panel, a dedicated real-world asset panel with BitSafe, climate trade, DRSRV, launch nodes, and Redstone. So yeah, please welcome on stage Jacob McGroom. So yeah, so
Thanks, bro. Appreciate you, man. All right, this is. All right, hey guys, how are you? Thank you for that, Nico. And thanks to the Sensei Node team for putting this on and for helping Canton get the word about who we are, what we're up to, and where we're finding traction right now. So by way of introduction, I know Nico kind of front ran me there. I lead partnerships and infrastructure for the network. What that means is anybody that's running a node on Canton, any wallet, custody provider, anybody doing anything with data, whether that's AML, risk intel, oracles, bridging interop, falls under my team's coverage. And then we also have some deep, 10-year deep trad relationships with your GSIs, your consulting partners, hyperscalers, et cetera. So the growth or the goal is to build out the best network infrastructure we possibly can globally for Canton. When I was talking with Nico, we kind of batted around a couple of ideas on what would be helpful to dive into today, and what we settled on was probably just get the word out as best as possible what we're doing, top to bottom, Canton 101. We've kept a relatively tight community since we launched a public mainnet a year and a half ago, but we've been at this for 10 years. And so I'll give a little bit of a history, kind of talk through what the evolution has been, and again, we're finding some traction. So I think the easiest way to say this, well, I guess you can't really read much of this, and that's because of these beautiful banners. Thank you, guys. But the selling points, if there's one thing that you leave with today, it's that we are, in our opinion, the only L1 on the planet that has privacy. There are a lot of L1s that approach privacy in certain ways, whether through ZK technology or some sort of FHE. You don't need to move that. Thank you, though. I appreciate that. We approach it in a totally different way, and I'll get into how that looks here in a second. Another one is that we've really focused on aligning incentive structures across the ecosystem too, and how we structured rewards, how we structured our go-to-market, et cetera. And so it's kind of taking back to the origins here as to how this network came to be. Our founders left TradFi. Two of them were at DRW back in the early 20-teens. One started Cumberland, one started Ventures. Another one was working on security and privacy, one of the original authors of the ZK Snark libraries. And so those three came together with the goal of really to bring finance on chain. I know that's like a very like nebulous concept, right? And something that a lot of people really strive to be, but we view kind of the way Ethereum went to market with their approach to kind of bring in the retail base and build up towards institutions. We kind of focused on the opposite of the spectrum. We said if finance is going to come on chain, we have to figure out how to enable institutions, enable banks, enable FMIs, exchanges, et cetera. And that was the goal. And so over cut to 11 years ago, we've raised quite a bit of money, some notable trad partners, and went out to sell a privacy-enabled blockchain to institutions. Some of the applications that were developed through those first 10 years, Goldman Sachs, HSBC, BNP have all built their tokenization platforms on Canton. We have Broadridge, who is a large partner of ours. They process about $10 trillion a month in repo transactions on Canton. I believe by notional, it's the largest crypto app in the world. Versana is a consortium of 8 global banks who manage about 85% of the broadly syndicated loan market on Canton. And then we have a few others. Nova Prime is a spin out of Lennar, the largest home builder in the US, who issues mortgages, securitizes them on Canton. And then if we go over here, there's a couple others, including Eliox, who I think is probably the only one that I'd want to call out as well. 5 of your largest oil and gas providers, so Shell, BP, Cook, Macquarie, or oil and gas traders, I suppose. Not all of those are operators. They settle physical nat gas trades on Canton. And so those were kind of the motions that we were in, right? Looking at how to enable a shared privacy-enabled data ledger for large institutional organizations. The inclination there was, or the incentive was always to move into a public mainnet. Again, we started kind of institutional level up. We always wanted to move down into the retail B2B, P2P kind of space. And as the macro political climate began to look like it was going to be more amenable to that a few years ago, we really deeply kicked off the motion for the Canton Network mainnet. And so last summer, we launched the Canton Network mainnet. We, at the same time, launched Canton Coin. We'll talk a little bit more about Coin and how the incentive structures are built around the token. And then we also launched the Canton Foundation, which sits underneath the Linux Foundation. We decided we didn't really go with the whole Swiss or Cayman-based entity. We figured that actually going under an open source governor like Linux would make a lot of sense and really provided us a lot of decentralized mobility to go cater to TradFi and institutionals. The Canton Foundation, again, a little bit more information there. So it's co-chaired by the DTCC and Euroclear. We can talk through a little bit how the CSDs are very integral to how we see the flow of finance moving, bringing treasuries and settlement structures on chain. So very large partners of ours, you'll see HSBC, Goldman, Moody's, alongside other names that are a little more crypto focused. So in DRW, BitSafe, Fairmint, Blockdaemon, Kaleido, Chainlink are all partners at our foundation as well, helping us scale this ecosystem. And the two primary advantages we have, if you haven't guessed already, is the privacy through data segmentation, as well as through aligned incentives. I think so I give this example a lot whenever I talk about privacy with different people in the Canton ecosystem, and I usually don't use people or individuals, but I'm going to today. So the best way to think about how we structure privacy is we have a segmented data model built into the L1. That, in conjunction with a smart contract language that we created, DAML, allows for application providers to provision data access on a need-to-know basis amongst the parties that are interacting with the app. Think of it as role-based access, right? Francisco, I'm gonna put you on the spot. I know that we're about to hop on a panel together. So the way this looks in practice, let's just say that there is some application provider, like ethereal application provider, that created a swap application, right? I'm gonna give you 20,000 Argentine pesos. You can take those, that's yours. And let's just say he wanted to trade that for a pen in an atomic swap. So normally, you have a blockchain, the fully replicated base layer of data that is going to allow this transaction to happen. The smart contract gets written to the chain, atomic swap happens, et cetera. The application provider here that created this application for us to exchange this asset would obviously want to provision Francisco and I the ability to see the entire contents of that smart contract from A to Z, right? They could also provision themselves, if they so choose, the ability to see the smart contract from A to Z, or they could just say, hey, look, we only really need to see A through D. They could also bring in a regulator, right, to see, let's just say, fields A and B, not the entire context of the smart contract that's governing that transaction. We call this sub-transactional privacy. It works for things like, in the US, we have the Bank Secrecy Act, where, any sort of transfer of money, funds over $10,000, regulators need to see effectively. That programmability can be baked into the smart contracts that are governing these transactions. And so when that swap happens, the nodes that are involved, so Francisco's node, oh yeah, I didn't swap it. You kind of just robbed me there. Yeah, the nodes that are involved in that transaction are Canton validator nodes, Francisco's, mine, the app providers, the regulators. Those nodes are validating that transaction locally. The entire ecosystem doesn't validate the data that is involved in that. Just those localized nodes do. Now what happens is that transaction is then packaged, privatized, and then synchronized across another layer of our network with things like public metadata, so transaction size, timestamp, and a couple of other bits. And that is synchronized globally to allow for atomic settlement of those shared private transactions across the Canton ecosystem. I guess this is my money, but you can take it, Francisco, if you want. Well, we'll do it after the panel. I'll pay you accordingly. Actually, I don't know. I think the chief legal officer might get on me for like bribes or gifts, or I don't know enough about that. So that's the privacy construct that we have here. It's the way things are done in Web 2. Again, we've been at this for 10 years working with large traditional organizations. It wasn't always the direct approach that we took. We've learned a lot over that time period, and this is the way that we decided to take Canton Network to market with DAML as a contract language on top of that. And for those, I know we're at a developer conference, for those who are dev heavy, DAML is like a functional-based programming language, very similar to Scala, Haskell, et cetera. The second piece that we think is a very, very core differentiator here of Canton is the way we aligned incentives. So again, on mainnet launch date last summer, we launched a Canton coin. Canton coin was a total fair launch. There was no pre-mine, no pre-issuance. We didn't give any investors any sort of bags right off the bat. The only way to earn Canton coin is through one of 3 buckets. There's a really helpful diagram right there that I can send anybody if they want to see afterwards on how this shakes out. But the 3 buckets are: 1, running infrastructure for that super validator construct, the synchronizer, right, that synchronizes those private transactions. We have about 30 some odd organizations that are super validators on Canton. They also make commitments to the network to become a super validator on network, things like product developments or asset flows, kind of your standard commits that most people would do through a grant program at an L1. We decided, hey, let's give them an avenue to earn at a distinct, differentiated token structure, token tranche, rather. And so super validators earn 1 tranche of coins. The second is just the validator nodes. The Francisco's node, my node, all of those nodes that are involved in that transaction that we explained earlier. Just by proving uptime, there's no staking requirements, nothing like that. Just by proving uptime, those nodes earn Canton coin on a 10-minute basis. And then the third way, which is really the most differentiated here, is we decided to reward the application developers. So again, if you look at most other L1s on the planet, the infrastructure providers are the ones that reap the rewards. Again, not saying that's right or wrong, but that's just the way that it works. We think that especially as you look at the end of life mechanisms of an L1, the application providers are the ones that are on stage at conferences talking about the apps they're building. The Morphos, the Lidos are the ones that are preaching the benefits of the L1s they sit on. Not necessarily the infrastructure, no offense. I know that there are a lot of really, really solid infrastructure providers as well, but we wanted to provide an avenue for those application providers to receive rewards. So the simplest way to think about it is however much traffic goes through an application on Canton, that could be a native DApp. It could be an application that's integrated. It could be, there's instances where we have stable coins classified as an application. Whatever traffic goes through that application is rewarded on a 10-minute basis in Canton coin. So through the first 6 months of our rollout, through into last year, we did a very kind of minimum viable network rollout. We found our staking partners and our node operators to scale this out. We had our core bits of wallet and custody support, risk intel, et cetera. Kind of got in some larger players through our super validator construct. But we really didn't hit the ground running until January of this year. And that's when we put a full go-to-market motion around this, really started scaling out the validator base. And particularly over the past 6 months, we've seen quite a bit of exponential growth. And so I believe this slide was built 2 weeks ago. And so at that point, we were a top 5 L1 by daily fees. We've 10x our user growth since July. There's 11x in daily transactions since January. so on and so forth. The ecosystem, I think that top number probably needs to be adjusted for some of the crypto activity lately, but we're somewhere around a $4 to $5 billion network valuation, 700,000 daily transactions, 35 super validators, 600 validators. Ask anybody here who's familiar with Canton who's trying to get on network. We have a list of about 2,500 of the foundation that are trying to get in the door right now. But given our architecture, we are scaling this in a very institutional friendly, controlled way. 100,000 plus wallets. And then you can see some of the more names that we brought on: Broadridge, DTCC, Goldman, NASDAQ. And then in crypto down there, Zero Hash, Chainlink, Fireblocks, Circle, Copper, Ledger, Sentinode, Launch Nodes are the friends that we'll see up here in a little while, Climate Trade. Yeah. And so that kind of brings us to where we are now. This is just some notable progress that we've made over the past 50 days. We announced our partnership with Chainlink. We announced BitGo custody. Theramune is a digital asset treasury vehicle that has raised $500 million to invest in Canton Coin. We listed on most of your major tier 1 exchanges, centralized exchanges. There are a few more rolling out through the end of the year. You may see one here in the next few days, potentially. Franklin Templeton's Benji announced earlier this week, or that was last week rather, that Benji is integrating into Canton for use. We'll be plugging them into collateral use cases that we take a pretty active role in bringing to market. 21 shares. And then the bottom 3 are highlighted in yellow, actually, because those all happened this morning. So 21 shares announced their ETP. SockChain issued their first digital bond ever in partnership with Broadridge through Broadridge's tokenization platform. And then Circle announced USDC through their X reserves. The best way that I can categorize thematically how we're approaching the rest of the market and the rest of the build out is we have a couple of core theses that we believe are really integral to the trajectory of our company. We believe that unlocking of trapped collateral globally is the biggest market opportunity for blockchain globally. 260 trillion some odd dollars of eligible collateral globally. A lot of that's tied up because of the inefficient processes that we have through Web 2, right? So things like 3-day settlement, cross-border fees, et cetera. A lot of margin, a lot of collateral posted to facilitate the risk involved in those legacy market structures. Our intention is, we believe that blockchain is going to solve a lot of that, unlock a lot of those assets. But blockchain with privacy at an institutional level unlocks even more. And so we really are chasing very hard the ability to mobilize collateral with the central securities depositories like our partners at the DTCC and elsewhere. Also working on some collateral mobility use cases across crypto, providing the ability to pledge margin exchanges with privacy. Anybody who's a market maker in this room knows how frustrating it can be to get front run. Basically, we want to provide a privacy layer to eliminate that. And then the second core thesis is payments with privacy. Obviously, if anybody was at Money 2020 a few weeks ago, Money 2020 has turned into a stablecoin conference. It is no longer the fintech conference it used to be. Stablecoins are literally everywhere. You guys have probably heard 100 conversations this week about that as well. We think that there is a very unique way that we can unlock very large business-to-business flows, privacy-sensitive, public-private flows, et cetera, with a L1 that has segmented data availability and privacy involved. That's it.
Can you please just hear me out? No, all work management platforms